Good afternoon, Governor. My name is Issa Abdullah from New Telegraph newspapers. The economy is on recovery path. Key indices have shown GDP is rising, the inflation is trending down. How do you think this can be sustained so that Nigerians can enjoy these improvements?
Good afternoon, MPC and Governor. I am Nancy Naji, the anchor of Moneyline with Nancy on EIT. I have 3 questions. The first one is a global component of it. Do you and the MPC have concerns about the impact of the US Fed tapering, as well as the normalization decision on the FX reserves? I checked our FX reserves yesterday, I think about $41 billion. Also that decision on the dollar rates and FX rates in general. Yesterday we saw Jerome Powell being announced again as Fed chair by President Biden. The second one is, in the wake of Mr. President's launch of the e-Naira on October 25, the e-Naira is the first African digital currency. I want to know, how is the e-Naira's performance and adoption rate among Nigerians? Then finally, what are the chances of seeing the takeoff of the infrastructure company, as well as the NIFC? I'd like to know where that will be located, and the reorganized Nigeria Commodity Exchange by the year. Thank you, Governor.
Good afternoon. My name is Leah Katun Babatunde, and I report for the Nigerian Television Authority. Barely 4 weeks ago, Mr. Governor, you announced the 100 for 100 policy on production and productivity, and following that, we also got some guidelines. Could you speak further to that, though you made mention of it earlier, the changes we're going to see, how you feel is going to impact on the economy? Thank you.
Good afternoon, Mr. Governor and his team. My name is Chinemere Joseph, the anchor of You and the Economy. My question is, latest figures from the National Bureau of Statistics indicate that Nigeria's GDP grew by 4.03% year on year in real terms in the third quarter of this year, which you highlighted. Now, showing a sustained positive growth over the last 4 quarters since the recession we witnessed in 2020. Without preempting your outlook for the next year, which we expect later this week, when you attend the annual dinner of the Chartered Institute of Bankers of Nigeria, are you optimistic that these figures will continue in this positive trajectory? Thank you.
Okay. And I have a number of questions from those are the pressmen who sent in their questions from outside. Now, this one is coming from Sunday Michael of Daily Trust newspaper. Sir, could you give us an update on the success story of the CBN interventions in the critical sectors of the economy? And then the next one, the bank was recently in Plateau State, where the president flagged off the brown revolution in wheat production. In spite of these interventions across the value chains of over 20 crops in the country, some are still of the view that there are no returns on investment, as it were, judging by reports of slow or non-repayment of loans by farmers. What is your view on this? The next question is also from Collins Wednesday of the National newspaper. It said, recently, there have been cases of deductions of money from the accounts of customers by some deposit money banks without specifying what those deductions or charges are meant for. What is the CBN doing to restrain the banks from such actions? And then finally, from Babajide Komolafe of Vanguard newspaper, there has been a raging controversy about who is the highest individual shareholder in First Bank PLC. As the apex bank regulator, what is the position of the CBN on this? Thank you, Governor.
Well, thank you very much. for this set of questions, and I always look forward to an opportunity to provide some clarifications and clearing certain doubts that that people may have in their minds about how we're doing our work and what our responses will be to issues. And I'm happy that the questions that have been asked, I think are broad enough to really respond to some of these issues. The first question from Nduka talked about the forbearance and that it is tapering to an end or is going to expire by March 2022, and how are we sure that withdrawing those forbearance or with the expiration of those forbearance regime that NPLs will not rise. My answer would be that if you recall, from our standpoint, we granted a forbearance regime from just two areas. One primarily had to do with the fact that we said that all loans, that people, companies and businesses that are impacted adversely by COVID-19, that they should be given about 2 years. We first of all started by saying 1 year from 2020 to March 2021, and by February 2021, we extended it by 1 more year when the third strain of the virus pandemic continued. We extended by 1 more year, making it 2 years that will expire by March 2022. So 2 years moratorium was one aspect. Another aspect had to do with the fact that we said for CBN interventions that there is a need for us to reduce the interest rate from 9% to 5%. Indeed, another aspect of the intervention or forbearance is that because we knew that the adverse consequence of COVID-19 was resulting in a reduction in the revenue generating capacity of businesses and companies, we also granted the banks an opportunity to allow their customers to ask for a restructure of their facilities. Maybe if it's a 2-year facility, extend it to 4 years, a 4-year facility, extend it to 6 years, a 6-year facility, extend it to 8 years, so as to reduce the impact or the burden of the cash flow on them. At this time, we believe, and those were the periods when there was an unprecedented lockdown of the global economy. All countries, with no exception, were on lockdown. Travels came to zero. People were not allowed to leave their homes. And in Nigeria, this persisted for at least about 3 to 4 months. Now, since from around September, October 2020, Nigeria began a process of easing the lockdown. And notwithstanding the fact that we still saw that around February, March of 2021, that the Delta strain now also now reared its head, we still said that these businesses should have this forbearance. At this time, we believe that the global economy has opened up. The lockdowns have been lifted, and of course, we know the casualties, the economic damages and fatalities that was caused as a result of the lockdown. And I'm so sure that not too many countries, if at all, will, in the midst of this pandemic, want to embark on a wholesome lockdown any longer. Particularly because most countries are all administering vaccinations that they think should assist in reducing the impact of the strain of the virus. So we believe in Nigeria, businesses are back, companies are back to business, revenues have improved, and if revenues have improved, then companies or businesses that took loans, if we see the loans for intervention has moved from 5 to 9, if we see that the moratorium of 2 years expires in March 2022, and of course the restructure that you have graciously benefited remains, then naturally we should expect that companies should be able to pay back their loans. So as a result, we do not see any likelihood of increase in NPLs. Indeed, we have worked so hard to bring the NPL down from as high as almost about 9-10% about 2 years ago to the level that it is today, which is 5.3%. And we're gratified that we're aggressively working NPLs down to the maximum threshold that has been set by the central bank. So I don't think there's any need for anyone to worry at all. New Telegraph talked about the fact that the Nigerian economy has witnessed some improvements. What is CBN doing to ensure that this trend continues so that the economic prosperity of the country, that we can continue to see the prosperity? Well, I think, again, it is important that we continue to commend both the monetary and fiscal authorities for work that has been done for us to exit recession. Again, Nigeria was confronted by a stagflationary situation where inflation was going up and output growth was coming down. If you want to tackle inflation, you have to tighten in order to rein in inflation. And in the process of tightening to rein in inflation, you will take certain decisions that will hurt output growth, it will hurt capacity of financial institutions to grant credit, it will make it difficult for the creation of monies, liquidity will become very tight, and what that would do is that it will constrain manufacturing output and also inferentially also get to hurt output. On the other hand, if for GDP, what you want to do is to see how you can continue to spend money. As you spend because you want to improve output, what will happen is that, yes, you see that growth is improving, but at the same time, that impact of easing, which increased liquidity in the system, will create inflationary pressures on the economy, increase prices, and create problem again for the economy. So you see, the basic issue is the dilemma of monetary policy. And that is why we say that, notwithstanding the peculiar situation that Nigeria finds itself, we are in a position where we're able to manage the balance, and monetary policy committee needed to be appreciated for the fact that rather than take on their own stance, which is price and monetary stability, they have said that they are going to adopt a stance of price and monetary stability that is conducive to growth. And that is why we're seeing what we're seeing indeed, and that is why Monetary Policy Committee prides itself that it has played a significant role in moderation of inflation, in the improved output growth that we're seeing, and overall improvement in recovery of the economy. And of course, all we would expect is that they have said we must continue to still pursue price stability that is conducive to growth. What does that mean? We will do everything possible to continue to support our households, everything possible to support our small and medium enterprises, so that can catalyze consumption and investment expenditure, help to improve gross domestic product. While on another hand, they have also said, the management should try and continue to use administrative measures to see what can be done to rein in inflation from that side, and at the same time, with its intervention in the other sectors, like maybe agriculture in this case, you would see that agri prices eventually, luckily we've been lucky. In fact, in 2021, we did not hear of any case of flooding at all. And that, for us, I think we must be very thankful to God. As a result of that, we're expecting a very bumper harvest in all our agricultural products. And if this happens, what that will do is that it will considerably dampen inflation and prices, which will continue to help our attempt to continue to rein in inflation and moderate prices in the economy. So we will continue to do these things. On the third question, Nansa talked about the concern on tapering, how will that impact and all that. What we saw in the last, I would say, 2-3 years, of course, particularly during the period of COVID, is that we saw a lot of easing, a lot of spending in order to boost economies. And what we have also seen, that it has resulted in the inflationary pressures that are persisting right now, even in the advanced economies, and that is why countries like the United States are concerned and are beginning to think about they need to embark on a bond buying program, so as to bond selling program, so as to reduce the liquidity in the system and the rest of them. So what does that mean? As they sell the bonds and they withdraw liquidity, yields in those environments increase. As yields in those environments increases, then we will see inferentially a flow of capital from emerging or developing economies back to advanced economies, because those areas are normally their safe havens. So what would that mean? You will see a flow of capital. It will move from the emerging. But for us, I must say in the last 2 years, we have not quite benefited from it, from those flows as such. Indeed, what we've been saying, we've been seeing gradual movement out, and the central bank has done everything possible to make sure that as those that we are dealing with the issues of foreign investors taking their monies out in a very orderly manner that does not hurt our system. We will continue to do that. So we don't see how that will hurt our system worse than the situation that we are today. So we'll just continue to do our work, because we did not, those that should border will become countries in the last 2 years that have substantial inflow of forex into their economies. Of course, naturally, they will lose. So there's nothing for us to worry here in Nigeria. The fourth question is asking, what is our assessment of the performance of the adoption of the e-Naira and the rest? I think the only thing I can say here is that it's still too early for us to begin to carry out an assessment, because it's just, I think this is the 4th week now. But I think it is gratifying to see that so far, I think we've seen almost about 560,000 downloads on the website, on the e-Naira platform, out of which 490,000 are consumers and 83,000 are merchants. So we're optimistic that things are going. But let's not forget, like we said, the e-Naira or digital currency product has extremely wide possibilities. There's so many things that can be done. But what we've done initially is to constrain it, begin the journey gradually. We are taking baby steps. So even in the midst of we taking baby steps to see how actors within that globe are behaving to ensure that we're able to control some of the risks that we see, I think that it is a good result so far. As we see the performance of players and stakeholders within that e-Naira market, what we do, we open it up more and more, and we think that it is a game changer for the world and also for Nigeria. So too early to begin to talk about it, but at least by way of update, we are moving closer to about 1 million downloads on that platform. And you're asking for some, are we likely to see some takeoff of Infraco? But on Infraco, let me say that basically, practically all the infrastructure that we need to put in place for the takeoff of Infrastructure Corporation has been achieved. And we thank the President for giving all approvals that are needed. We thank the Vice President, being the chairman of the steering committee, for also giving all the approvals that are needed for us to proceed. Transaction advisors have been appointed. Asset managers are eager. 4 of them have been appointed. The management of Infraco, with just a few number of people, we are currently concluding the appointment of the CEO of the Infrastructure Corporation, who is an expert and first-class person who understands infrastructure business globally and the rest of them. But we even while we are waiting for the management to get on board, the shareholders are holding very aggressive meetings, and they are currently reviewing about 3 major projects, which eventually will be handed over to the asset managers. And I'm sure that the asset managers themselves are salivating and waiting to see those assets come onto their hands, so they can begin to fund the infrastructure development of Nigeria. So we're very hopeful that is going on very well. The NIFC, Nigeria International Financial Center, we just feel that Nigeria, being the biggest economy in Africa, should be able to establish a financial center. That is also going on well. We just have about 4 weeks to the end of the year, so I'm not that optimistic that we will. Don't forget, I have said within 12 months we would. But I believe that before the middle of next year, the NIFC should actually begin operation. And we also have received several inquiries from foreign investors and actors in financial centers that are willing to come on board and work with us here. On the commodity exchange, work is also advanced. The team working on that, I think we'll have a couple of meetings to hold. We have to talk about how do we deal with the existing board, how do we deal with the existing management, how do we deal with several other issues and the rest of them. And as soon as we're able to deal with this, I believe we should be ready to take off. Funding should not be a problem. Now, on the 100 for 100 policy on production and productivity, this is basically one of those interventions we felt we should put in place to really help to grow the Nigerian economy, create employment in support of the president's vision that we should create 100 million jobs in 10 years, which is like 10 million jobs in 1 year. That, I must say, is daunting assignment, but I think we all should play our roles from different sectors of the economy, whether from the monitor or fiscal, to see what can be done to help achieve this objective. So here we're looking at how do we begin to really support and catalyze productivity that will help achieve our own policy of import substitution, that we have raw materials in Nigeria such that if the plants and equipment are funded, right, the raw materials that you need to operate those factories are almost entirely available in Nigeria. That is our objective, because we believe that if we do so, we will begin to see that we are truly diversifying the base of our economy. We'll begin to say that what we can produce in Nigeria, we are producing them, and not that we're importing them and exporting jobs to other countries. That we're able to create jobs for our people and not export jobs to other countries. That is what we seek to achieve. And we have said it very clearly that we will advertise it, we will scrutinize it, we will ensure that all the indices necessary in terms of employment, raw material content are all measurable. We can see it before we embark on that project. And if anybody is doing anything that is wrong, Nigerians will be there to say it. So I believe that is something that is also revolutionary, and I think will also help to ensure that, but I keep saying, our own, what is our selfish interest? If we fund industries that will produce what ordinarily we import, produce it locally, create jobs, right? It also saves the dollar that would have spent importing those goods. And that is where our own selfish interest is. And that's why we continue to talk about what is our own really selfish interest in this. Our selfish interest is that we want to work hard to reduce the size of foreign exchange that people come to ask for to import goods that can be produced within Nigeria. And we are really very determined to achieve this, and we are calling on the support of everybody to achieve this objective. Chine Miriam talked about the figures, about the growth and all that, and that without preempting my outlook. I think don't preempt my outlook. By Friday, we'll talk more about it. You hear about it. But I think that what is important is that we're very upbeat about the progress that we've achieved so far in the economy, and what we can see if we keep doing the right things is that yes, we are still far from double-digit growth, but I believe Nigeria will move aggressively, keep doing the right thing, stop doing the wrong things, focus aggressively on them tenaciously. I think the growth levels will move aggressively upwards. We are expecting that growth for 2021 certainly will be above 3. We are so certain to be above 3. So if we take it on from there, of course 2022 we'll expect that it will move towards 4, if not better, if we keep doing the right things. Because whether we like it or not, as economists, there must be ceteris paribus. All things being equal, because if something happens and that makes it difficult for you, you will tell the whole world, This is where we planned we should be, but ABC happened, and so we couldn't achieve it. Unfortunately, this is what we achieved. But we don't pray that those negative ceteris paribus happen, so that we can continue on the right course and the rest of them. Yes. Well, I think I can, talking about bank charges. The Central Bank of Nigeria insists that consumers of bank services, in these customers, must seek, and indeed, if it is not on CBN website, I'm going to ask that we place it on our website, the guide to bank charges. Go and read your guide to bank charges. You should not allow any bank to just pass on any discretionary charges on your account that is not contained in the guide to bank charges. Hold it as your Bible as you deal with the bank. If you find any that is not, raise an alarm. We have our Consumer Protection Department. We have always advertised our own hotlines and emails where you can always reach us. And indeed, we have seen cases in the past where people have raised an alarm, and it has resulted in hundreds, if not even billions of naira reversal back to customers' account. So I can only say, if you are being charged by any bank for transactions that did not happen, or charges that are not inside or stated in the guide to bank charges, you have to ask the bank to reverse it, because it is not meant to be there. Now on First Bank. Yes, you are right. We've been reading about some newspaper talks about that. You know, for us, yes, newspaper talks. With due apologies to the press, we will continue to read these stories. But the point is this: I think it's good for us to cast our mind back to the position of First Bank 6 years ago. 6 years ago, when CBN started this program of looking at the bank to reposition, let's not forget, First Bank remains the oldest bank in Nigeria, 1894. It is I use the word, strong, aggressively, domestically important bank in Nigeria. If anything happens to First Bank, it means something has happened to the Nigerian banking system. And that is why we're taking our guidance about how to get the bank back afoot very seriously. 6 years ago, like I said, because of the build-up, an aggressive build-up for non-performing loans on the books of First Bank, the share price of First Bank was about 2 naira per share. We took it on, right? Everybody was running away from the shares of First Bank. Because we have cleaned the balance sheet now, the NPLs have dropped aggressively. People are seeing that this money-making machine, First Bank, is back again on the race for profitability. They are now competing for the shares of First Bank. Why should I quarrel that people are competing for the shares of First Bank, which 6 years ago was 2 naira, and they were running away from it? And today the shares of First Bank, and the last time I looked at it, was 11 naira 55 kobo during the weekend. I'm happy to see that they are competing for the shares. But of course, they should all know First Bank is so big that not one person can say he owns First Bank. They are just one, and they should see themselves as representing others in running the bank. Okay? I have read Securities and Exchange Commission clarify the issue of shareholding percentages of different, and indeed they are the people that are supposed to do so. Our examiners themselves are also continuing to look at it, and we will, I think we should take SEC's position, because SEC is a regulator of the capital market. We'll take their position and they will give guidance on this subject. But of course, as it affects the running and operation of the bank, we will take preeminence in ensuring that the right things are done. But of course, our examiners are looking, of course, naturally, returns are sent to Central Bank of Nigeria about people, individual shareholders. And of course, if our position is not in tandem with the position of SEC, we'll talk to SEC about it and we'll also advise the public. But so far, I would say that we should take the position of SEC as the regulator of the capital market, because regulating share price ownership is sole responsibility of SEC, and we would not want to override SEC, the regulator, on these issues. But we'll continue to work with them, and we'll have very, very good relationship with them. But I would just say, I am very happy that people are scrambling today for the shares of First Bank. This is the last Monetary Policy Committee. I wish you all a very Merry Christmas, Happy New Year, and I think enjoy 2021, and let's meet in 2022 again. Good afternoon.
Thanks for checking out SYMFONI on YouTube. Please be sure to subscribe and like our videos for updates.